Hey, Kobe Trades! I wanted to do a video analysis update on Nvidia. And I know what you're saying, looking at the thumbnail of this video. Oh boy! This is just another one of these gurus posted another video that's a little scary about how Nvidia has gone on this monstrous rally. And they just can't believe that Nvidia could go higher. So they're calling the top. Right? They're trying to make sure they have that Discord money, right? Because they don't actually make money in the stock market. They make money off of Discords. They make money off of X checks. Right? I don't make money off of X checks. I knew a group of women about 10 or 15 years ago who made money on X sites. I don't know anything about that. They can ask about those people. Anyway. X sites. Y'all are making money off of X sites. Now, I don't make money on X sites. You see how much? Anyway, this isn't one of those videos. But I want to tell you something if you're new to this channel. And by the way, I hope you are. I understand why you look at a lot of this stuff and you look at all these people and you're like, man, these people are charlatans. You know, these people are furus. These people are swindlers, man. These people are swindlers. You know what? I don't blame you. In fact, I commend you for it. I'm even gonna go as far to say you're correct. Good on you for doing that. Good on you for doing that. But that ain't me. I've called multiple 400% rallies, and not just Nvidia, but, you know, Nvidia particularly. You know, 400% rallies when everyone's trying to, you know, capitalize on the fear porn. I try to capitalize on the fear porn, you know, by, you know, buying these extremely high yields and all these new types of ETFs, like JetQ, like FEPI, you know, JetQ, running, you know, a variation of the half right, you know, owning about 80% of the NASDAQ and collecting covered call premiums from about 20% of the rest of its holdings through equity-linked notes. That's JEPQ. FEPI is aiming to stock pick the best tech stocks with its own, you know, selective index that it has, and also sell out of the money covered calls. And not a tech stock, but SRHR doing a very similar thing with real estate. I have a secret ETF. I'll see how this video does. I found a secret ETF. I'm not ready to talk about the secret ETF. This video does well. I've got a secret ETF. Right now, I think Jason and Vinesh are the only people who deserve, you know, to know what that secret ETF is. You know, I'm gonna try to dog whistle it to them, you know, through the grapevine. Anyway, that's obviously a joke. This is all, you know, just for entertainment and fun. But I get why you people think I'm definitely buying it. I've already bought it. I haven't bought it yet, but I'm buying it like in the future. I already have my cash flow for the future. Oh, man. Oh, man. Anyway, I get it, but I don't make my money off of X checks. Again, get all these losers out of the market. I do not give a flying F. December 9th, 2022. Where will the gurus be when Nvidia holds 108 and blows past a new all-time high? Do you guys have an answer for that? The same place they were when it tripled from 115. Whatever, baby. I'm sure all these quants know what they're doing, right? So I wasn't one of those, you know, people trying to capitalize off of X checks. I dealt with Bidenflation too. I dealt with stagflation, but I didn't prostitute myself on an X site and tell people to sell their houses, get out of their mortgages, even if they had 0%. You know, Nvidia is going to zero, and then become an AI expert, you know, or still be talking about it. I don't know. I'm pretty sure that one prostitute still has it pinned to their post that they like called the top on Nvidia. But anyway, another one, you know, May 23rd, 2001, all eyes on tech, right? Again, everyone was trying to, you know, you know, all types of, you know, post CV-19, you know, post-pandemic stuff, you know, going on, all this money printing, all these stimulus checks, whatever, 0% required reserves ratio, no talk of interest rate hikes, but nope, you know, the gurus aren't trying to prepare you for that. Well, what do they say? They're trying to say we're going to retest, you know, the the COVID lows, right? And so we're gonna crash. I wasn't a prostitute. I was like, you know what? I think they're ending wave two. And I called one of the biggest tech rallies ever, Microsoft, Apple, Nvidia, multiple times. So I get it. And look at all these people got butthurt. So many people got butthurt. This used to have like 460 likes. People just get butthurt and they unlike it. I'm held to the most high standard in the world. And then even when I smoke it, people just get butthurt, man. So anyway, I've been saying for a while that I was using long gamma positions on the Metaverse ETF, METV. And so those positions, I'm not going to be laborious and bore y'all with all of the, history of, my long gamma positions on METV, but the skinny of it for my expiration for February 16th was a pretty big one. May is kind of a small one, but what I've done now, my primary downside hedging and upside long gamma forever exposure, not necessarily my primary, but it's a long gamma position, so it has upside exposure and downside exposure. It's not a straight short, to hedge. It's a long gamma position. It could also make me money to the upside if Nvidia and Facebook, now Meta, keep just going to the moon. And so I'll talk about why reasons, even though, despite everything I'm going to say in this video, I'm not shorting Nvidia and I'm not shorting Facebook. I'm not. But in fact, I am going to continue to own NVDY, which is an ETF I lump summed at its inception. And that was basically, I lump sum since its inception. I collected the dividends and, I reinvested a few of them, but I mostly used them to accumulate other assets that, were safer and more diversified than Nvidia. But anyway, I have long gamma exposure to Nvidia and Facebook through an ETF called, in most of the market really, most of big tech through an ETF, most of big tech, not the entire stock market. Unfortunately, yeah, the S&P has gotten, pretty techy, but the NASDAQ itself, there's a ton of overlap with the Metaverse ETF, at least. I think I also use this ETF to hedge a portion of ARK and OARK that's roughly about 30% ARK and about 60 to 65% OARK. Anyway, so that's got, you guys know the stocks that are in ARK. Anyway, so that's an ETF that I use, but two of the biggest holdings for a long time, and most of the big holdings of the Metaverse ETF are these big tech, so-called Magnificent Seven stocks, and, they changed them around for a long time, but this is the holdings, and they can adjust them, but this is the ETF that I've been using to manage risk in this sector. So long story short, I rolled my long gamma positions on that ETF to August 16th. And so that consists, and I bought this for each lot, I bought an even number of this for a total of $135 per lot. So this is called a strangle. It is the 12 put and the 13 call on the Metaverse ETF. METV. Now, there's ways that I can really get into how many shares of the market this would quantify, but this is really just to answer a question right off the bat that I would hope, people would have. How I use long gamma positions to prepare for downside in the market, especially when, a stock like Nvidia, looks like this, and, really we're about 1 year into the rally, right? So if they bought it against these strangles and straddles on the way down, and then they've held it for a year. Now we're getting right into this 1 year period where capital gains season. Anyway, it's just something to think about. I'm not getting into the chart just yet. I'm going to stick to these straddles and strangles first. So I do have a strangle on the Metaverse ETF in an even number. And the 13 call was $70 a contract. The 12 put was $55 a contract, and so that gives me unlimited downside and upside exposure to a growth ETF called the Metaverse ETF. And so that would be just one way of answering, my question to what am I going to do if Nvidia crashes? I'm not shorting Nvidia, but this chart now is looking interesting. I'll just be a little anecdotal. And, just to say, there's a long history of people who have called the top on Nvidia, and I don't think anyone's goal in the market should be, to call the top. I'll just be honest. I was look at this. First off, let me just give a quick shout out to Bar Chart. Bar Chart's about to put everyone out of business because this is this Mansfield Relative Strength Index that measures a market component against the S&P, and it's really beautiful. Even just looking at some of these for Nvidia, it's like, okay, so the buy 812.19 is here. The sell for relative strength is here. The buy is here. The sell is here. The buy is here. The sell is here. The buy is here. The sell is here. We're talking about 4 for 4. Pretty nice hits. Pretty clear entries. But anyway, no bias, right? Can't go fudge that. But anyway, so Bar Chart's about to put people out of business. I'm trying to put people out of business. This new ETF, I'm telling y'all, there's a secret ETF. Depending on how this video does, there's a secret ETF. This is the first ETF I was like, okay, no. We still got subscribers going down. We still got likes going down. I don't know, man. I'm going to need to, I'm going to see if Jason knows how to whistle. Anyway, I know Jason's still there. Anyway, so just to recap, in a recent video, I had expressed concern that Nvidia was entering a danger zone. And that danger zone was that it had gone past the 161.8, or it had reached the 161.8% extension. So let me just make sure I have these numbers absolutely clear. And we're going to get into some Elliott wave math. So we're going to get a little boring now. 33.15 is this low. 33.15. Let me make sure that is the proper low. I think, yeah, it's from this. Is it? It's 2018. No, it's the 2018 low. It wasn't even the proper low. Okay. Very similar, though. There it was. Okay. This 2018 low, again, this bottom was in December. This bottom was in December, right before tax loss harvesting. It's not rocket science sometimes. People who, slice open aortas, and put balloons over them. They're like, how do you manage the stress of all this? I'm like, you were doing surgery last night. Anyway, this high is 346.47. And this low is 108.13. So here is what I was justifying for saying a very similar thing. And really that video that I was saying was specifically talking about quad witching. Now, I've posted before. Let me see if I can find it right now. I want to stick to the facts. Everyone's a fact checker now. Okay, here. So this isn't something I'm new on. This is August 8th. August 2nd. Sorry, August 2nd. This isn't something I'm new on. A lot of these gurus, they're baseball stat gurus. If CNN's talking about some metric and that's what's trending, that's what you can convince someone you're an expert in Libor or SOFR. They're going to be talking about those rate metrics. Probably in mid-August. I think in mid-August, your favorite guru is going to be talking about the repo market. He's going to be an expert in ETNs, and he's also going to be an expert in mortgage-backed security rights, of course. Anyway, I think that's on, that's, it's probably going to be another, it's probably just, I think it's going to be very similar to last year. It seems very similar to last year. They've got one bank picked out that's just going to be the bank that gets effed and that scares everyone. Maybe that's what it's going to be. I could be completely off. Anyway, March quad witching into the first quarter, there's a VIX spike. There just is. Just past performance does not indicate future results. That's the statistics. That's the math. Just read it. I mean, it's right there. Volatility index, S&P 500, 100, seasonality. Kona Call asked for a session on this, but this is just statistics. Since 2020, the end of 2022, Twin Peaks, Twin Peaks, and the biggest ones in March, but it's not rocket science. End of the first quarter, they want to rebalance at the VIX spike and short that volatility. End of the September, that's when they want to do buybacks for the fourth quarter, and there's a special buyback period for these institutions in the fourth quarter. Anyway, so I always have long gamma positions going into the VIX spike because I'm not an idiot. Anyway, or not because I'm not because I'm active. At this point, it was because I was an active, and I still am an active investor. But these tech stocks, for a long time, and they're really high liquidity. They were the first ones to offer premium collecting ETFs that was really juicy, and also ways to get it to where not all of the income was being covered. So whereas before, when QYLD was the only, covered call ETF, the best way to get income from the market was about 35%, or whatever, allocation, QYLD, and the rest was QQQ, and then that was just going to be, the partial coveredness of it. Now they have, this in the forms of ETFs. Now they have this in the forms of synthetic covered calls on ETFs, and Nvidia, and ARK is the other ETF they have it on. Anyway, the metaverse ETF long gamma positions were very critical as my portfolio has really grown, and as these ETF markets have really grown. There's so many covered call ETFs on bonds now. There's tons of ways to get income from the market, in real estate, and even now the scale's getting so large that premiums from non-covered calls are going to be, just regular dividends is a fancy way of saying that, are going to be coming in. And for all the people who are hearing this and they're just hearing taxes, I do live in a tax favorable state for that, definitely not giving that, Jason, you better know how to whistle for that one. Anyway, I got this all figured out. But I'm starting to look at some of this and I'm like, if we still got Game of Trades, and we still got Wifey, and we still got, Trigger blowing up just because they got Twitter Blue and these X checks. This is ridiculous. Anyway, I've always got, I got Strangles on the Metaverse ETF. Quad witching's coming up. Really, just to be honest, it wouldn't matter if, it doesn't really matter what the wave count is. But let's look at this weekly wave count, because it's this weekly wave count that's a little interesting. Because let's just talk about the Elliott wave perspective. Right off the bat, this low begins in 2018. What I was looking for is that this is wave 1 and wave A. I was really looking for this to be wave 1. I'm sorry, I did not ever think that this was going to be a wave A. But from a minimum expectation point, it's always good to know that it could be a wave A. Just because it's important to know that ABC dynamic. The ABC dynamic is always going to be the minimum expectation. 5 waves up, 3 waves back, 5 waves up, 5 waves down, 3 waves up, 5 waves down, ABC. Anyway, that was a little too robotic, but we'll just get to see it right here. I didn't think this was an A or a B, but it's important to note, even if this was an A or a B, and what kind of gave this credence that this is where wave B ended. Exact same thing I mentioned in this post. Exact same thing I mentioned in this post. It was between the 61.8 to 78.6% retracement. You can go look at that earlier in the video. So we are between the 61.8 to 78.6% retracement. I'm not going to completely get the numbers just for the flow of the video. But yeah, wave 1, clearly 1, 2, 3, 4, 5 waves. So let's just look at this. 1, 2, 3, 4, 5 waves. A, B, C correction. This is kind of an easy one to label. A, B, C correction. Some wave theorists will say this is wave A. B, it's basically the same level. I don't get in arguments with wave theorists that are arguing for the exact same thing. A lot of people don't see. Anyway, here's what I was talking about. Some wave theorists are going to say this is wave A, January 2022. This is wave B. And so the proper count is that this is where this wave C box ends. They're so close together. If wave A was actually March of 2022, it's the exact same thing. So that technicality is just kind of dumb, and it makes wave theorists look like we don't have a system, and honestly, most of them don't. The system is that the Discord is going to keep paying. That's not mine. Anyway, so wave A, wave B, and wave theorists, they have profit-taking systems too. I was like, all right, well, this is the damn target. I mean, everyone's an expert in AI, right? And so this is what I was thinking, this is where wave 3 could end, right? So this is what I was thinking. I'm just going to be completely blunt. It wasn't a short Nvidia thing. It wasn't, I was specifically saying, actually, and what I'll also mention in this video, that there still looks like there's a lot of setups for love. And, I've seen they have different robotics ETFs that they use. Why is it sending me the London Stock Exchange? No. What the heck, bar chart? That was probably user error, but London Stock Exchange, come on now. Yeah, they've been using this robotics ETF. This would be a good example. So I think Nvidia's been the leader. And as, we get to this kind of like 1 year point, we're 1 year into this huge Nvidia rally, we got quad witching coming up, and it just kind of seems like, we'll get into the count, because really that's, a little more, the science and mechanics of tax loss harvesting, and, that's, plenty of people know about that, more than me, just to be frank, right? But this ETF would just be one example of an ETF that like looks like it could be benefiting, if Nvidia did pull back, or even if it didn't, even if it just consolidated, this robotics ETF, some of these growth names, other aspects of the semiconductor sector. What's that one in Taiwan? It's not Taiwan Semiconductors. Oh man, I'm drawing a blank. It's like a $6.58 semiconductor. Anyway, I'm not gonna do that. That's just one example. Okay. Of a small cap semiconductor ETF. It's basically just more of this idea that maybe some small cap, medium cap technology, plays catch up. I know that's wishful thinking, but I wanted to give bots as an example of an ETF of what that might look like. Wave 1, wave 2, wave 3, and then let's say this wave 3 is a little aggressive. It gets to the 121.6% retracement. I could see a theme of 2022 being that maybe Nvidia slows down, and some of these more, right, what's everyone kind of thinking, that we're going to have some, dramatic events going into the election, and maybe some of these niche small cap stocks, I don't know, might get some of their money. The AI stocks, that's really become a whole sector. I see some of these stocks potentially, being, I own AI and I own AIYY. This would be another example of a possible, theme of maybe this is the kind of stock that follows Nvidia in 2024. In the AI world, bots would have been an example of the more robotics side of the world. So anyway, I'm 100% not shorting Nvidia. What I had was that, hey, this is the 161.8% extension. Wave theorists say that's where they look for wave 3 to end. But now, what could be happening? Well, Nvidia's had such an extraordinary rally that now it's actually had another feat of Elliott Wave. It's had another big Elliott wave feat. Now a possible count, and let's just talk about what this feat is. A possible count and an incredible feat that Nvidia's done is that now from the 2018 low, it's gone wave 1, wave 2, it potentially could have gone wave 3, and this big rally that just out of the blue from late December, where it goes on this crazy 6-week run, it doesn't even seem like it's possible, but that run was the entire length. That run was the entire length of this rally. That was 3 years. Look at this. This is a 3-year rally. Nvidia just did that entire rally in like October 30th to, 3 months, 4 months, November 30th, December 30th, January 30th. We just had a 3-year rally, be met lengthwise in 3.5 months for Nvidia. So now what could be happening? Look, we're right there. What could be happening? Look at this candle and look at this. I don't want to, but this is the definition. This weekly candle right here. This weekly candle right here could fit the definition of a doji candle on the weekly chart. And I know that this is a new metric, but this is just kind of scary. What is a doji? A doji is a name for a trading session in which a security has open and closed levels that are virtually equal, as represented by a candle shape on a chart. Based on this shape, technical analysts attempt to make assumptions about price behavior. Doji candlesticks can look like a cross, inverted cross, or plus sign. Although rare, a doji candlestick generally signals a trend reversal indication for analysts, although it can also signal indecision about future prices. Broadly, candlestick charts can reveal information about market trends, sentiment, momentum, and volatility. The patterns that form in the candlestick charts are signals of such market actions and reactions. This idea that a doji candle could be a reversal candle on the weekly chart, which is my favorite time frame, also lines up perfectly with this. This 1, 2, 3, 4, 5 waves up could end a large wave 1. Okay? So, I know what you're thinking watching this whole video. Puppy Trades, you're by far the best technical analyst in the world. No one's called the market better than you in history. How do you only have 4,780 subscribers? And why do your X followers keep going down? And I'm going to tell you right now what the answer to that question is. It's because they, as much as they love to abuse the beautiful art of Elliott wave theory, they refuse to tell their followers the one rule that actually makes it a real technical system that has the one limitation of Elliott wave theory is that the rule is that if a clear impulse cycle is developed, 1, 2, 3, 4, 5 waves up, also now on the RSI, potentially ending with momentum divergence. Where there's one rule in Elliott wave theory. None of these internet strippers who abuse this art and then will move on to SOFR and Libor and reverse repos and what are they gonna? Yeah, that Fed emergency lending thing that's gonna be a big thing March 11th, man. Anyway, that's gonna be the quad witching psyop. It looks like. The one thing about Elliott wave theory that I will only ever share with my followers that none of these people who hit it and quit it and then go on to whatever's going to get them, it's usually, sell your house, the mortgages, are going to be worthless. The rule is that when a clear impulse cycle, 1, 2, 3, 4, 5 waves up has been identified, the proper thing to do in Elliott wave theory is prepare for a counter trend correction regardless of the form it takes, and not try to game it necessarily, but to prepare for it. Understanding that it may not happen. Nvidia's in an impulse. It can go to Jupiter. There's nothing in this video that I can say otherwise. And I've also said in this video, I think BOTZ, an ETF full of robotic stocks, is going to do well. And I think AI, an AI stock is going to do well. Those are in Nvidia's sectors. So that's why I have a long gamma position on Nvidia. And I'm prepared for this correction. So, and I'm still going to hold in NVDY so that if Nvidia falls back, with the Metaverse ETF, I'm going to buy against these in-the-money puts. I'm going to buy against these in-the-money puts. I'm going to buy against these in-the-money puts. ABC, and then get ready for the rest of the rally. Now, let's look at some. This is a Doji candle. This is the definition of a Doji candle. So let's just try to maybe get some upside limitations here. I'm usually talking about downside limitations. This is the Doji candle. So if Nvidia had a gap above this high, it's just entering a hot zone. Even if Nvidia was above this high, I'm just not going to own Nvidia commons. I'm not going to short it. I'm going to keep owning NVDY because these gains are paid out in the form of massive dividends that I never have to give back. An Nvidia long, who wakes up tomorrow morning, possibly, Tuesday morning, and Nvidia's at 770, 780, that's totally a possibility. And they say, oh, pups, just another one of these furus. I'm still going to have, and this is just one part of my option settings process. I still have long exposure to Nvidia. I still own market indices, and I still own tech indices, things like JetQ. I'm still, a fan of. I would like probably a pullback in that name particularly. But anyway, these gains from NVDY, these massive dividends as the covered call premiums continue to get more bloated and more bloated, they're crystallized. I never have to give that back. Nvidia, well, I've called multiple 400% rallies, is approaching quad witching 1 year, after a substantial rally, and it formed what is the technical definition of a Doji candle. So if Nvidia, so 746, that's extremely tight. I'd say realistically, the weight from an Elliott wave perspective, wave 5 can be the length of wave 3. That's usually as long as wave 5 can be. Could Nvidia explode? Usually, wave 5 is not longer than wave 3. So I'll give this little box right here, the top of this Doji zone. So here, this is kind of a place where wave theorists, those kooky wave theorists, look for wave 5 to end. I'm not shorting Nvidia. I am long of things that are arguably correlated with Nvidia. But I'm prepared for quad witching. I suspect that there's going to be, some love to share in other sectors like the robotics sector and the AI sector, and that, maybe Nvidia is going to give some of this money back. And I'm happy to be wrong and keep collecting covered call premium and watch, the Nvidia diehards succeed if I'm not.